Where is Palantir going? Can it make us rich or go broke? What is the market's mood at the moment and what would be the best approach going forward? Hello everyone, I hope that you had an amazing day and lots of profitable trades. In this video, we're going to talk about Palantir and see if it's the right one for you. Over the past few years, things haven't always been great, especially in the job market. Companies once considered as safe havens for everyone seeking employment and to, work towards a goal in life have been reducing their workforce, and it's been a traumatizing experience for many who have been concerned. At the same time, the rapidly rising inflation has been eating away people's savings in many countries that have only known deflation for generations. When every assumption about the reality is getting blurry, we must seize that opportunity and to start working towards our own financial independence. One key aspect to improve is to find the growth opportunities of tomorrow and seize the ones that may multiply our capital, increasing the money available for later projects and investments. We need to find the golden goose, and for many, Palantir is exactly what we've been looking for. Over the past few years, it became so much more than yet again another one of those, tech stock darlings collecting money in exchange of empty promises. It has grown into a major player in the sector that may tell us a lot about the market appetite for speculative ventures. Now, the company has enough influence, mystery, and prestige to arouse the market's curiosity and people's tendency to follow the trend. It is a company that people would often view equally as the risk appetite of the market, and rightfully so, alongside others such as Tesla or Nvidia. Palantir's reactivity to the macroeconomic tidal waves also makes it a pretty interesting company to simply analyze and to follow. So in this video, we're going to take a deep dive into Palantir and to see if it deserves to have a place in your portfolio. Before the video continues, I want to just take a moment to thank you for coming to my channel and to hope that you're going to enjoy your stay and to come back for more content. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of companies I cover. With that being said, I hope you're going to enjoy today's video, and let's get started. Over the past few days, Palantir has been able to hold its ground around the $25 level while the market remained fairly uneventful within the tech scene. Palantir has been able to take a breath while looking for its next move, and the market is now mostly in vacation mode to prepare for a probably much more eventful autumn. It's worth mentioning that so far, despite the absence of any significant catalysts, the drift of summer trading volume and the previous attempts to push Palantir lower, the share price never went below $20, which suggests that this bottom might hold for the time being while looking for consolidation. Some additional reasons might include the upcoming rebalance of S&P 500 and the doubts of Palantir's capacity to maintain its growth rate in public contracts. These elements might be enough for many shareholders to take profit while waiting for a better entry point. A lot more people believe that the short selling can be a good idea given the price actions pullbacks. Unfortunately, they were not, numerous enough to make this idea a self-fulfilling prophecy. So it didn't really go very far. Because of its shareholder base, or the nature of its shareholders base, Palantir remains a stock made of momentum and a large dose of anticipation instead of cash flows analysis based on, the financial results. The fact that its actual financial results are decent are not enough to support its current valuation, let alone pushing it higher. We can see that its widening scope has grabbed the market's attention as of late, which is kind of indicative of what the market focuses on. Previously, the resistance levels have been identified at $25, which the stock is still struggling to surpass. with the support levels that are located anywhere between $20 and $23. It seems like the stock past history provides some or a lot of stability and choppiness to anyone who tries to short sell it. These levels serve as important markers for investors, indicating a pretty important or significant reversal area or continuation area for the price action that passes through. The short-term trends of Palantir appears to be, on the up and up. So the previous decrease in both interest and volume are now probably old stories. We're now waiting for a new wave of catalysts just to be used as like an excuse to push the stock upward. So with that being said, it certainly experienced a prolonged period of uncertainty when the failed attempts to reach 25 saw the profit taking happening and the price pulling back from 25 to then 21. And then when an increased amount of articles popped up questioning the sustainability of the company, it went down even further, near like the $20 level. And this is probably all behind us just because the market is kind of flimsy. It's summer. We don't want to overthink too much about everything, especially knowing that at the end of the day, one major factor is when is the Fed going to cut the rates? And this will be influencing, a lot of portfolios' decisions. On a fundamental level, Palantir has always gathered a lot of interest from retail investors since its initial public offering. If anything, this might be one of potential weaknesses for Palantir's long-term outlook. The fact that institutional investors have yet to own the majority of Palantir's shares. This, in my opinion, could be a sign that despite its pretty solid business model and the reliable revenue streams, Palantir is perceived to be too expensive by institutional capital. And that increased presence of retail investors also explains why it's known to be pretty volatile for a stock of its size. Ever since its trading began in the secondary market, the sentiment has been overwhelmingly reactive, with investors willing to capitalize on any sort of trends that are forming. So, for example, people may talk or brag about the company's innovative approach to technologies or its special approach or opinions about its own peers or rivals really in Silicon Valley, and also the tech sell-off, as well as questioning the company's strategy, the insider sales when the company goes down. So its journey has been pretty choppy with a lot of like contrasting moods. And really, are they necessarily always related to Palantir? They sometimes are, but it's not always the case. And I would argue that in the case of like Nasdaq tech stocks, we should expect that external factors are going to influence the stock a lot more than things like the blue chips and so on. One significant aspect for Palantir's movement is the correlation between fundamentals and the macroeconomic news cycles. So geopolitical uncertainties, any sort of supply chain issues between sectors or continents, interest rates decisions, or regulation narratives about AI, crypto, data, may have like a very significant impact on the share price, while also being simultaneously affected by the company's own news regarding its financial performances, new products, guidance, outlooks, and so on. The relevance of analyzing news, I would say, is interesting but limited. It can be used as a tool to observe its ongoing trend. It can be used to validate what you're currently reading and what your mind is telling you. In other words, if you think that everything is going fine for Palantir, but everybody else seems to be saying that, oh, is this the end for this magnificent stock? Then this is the time that you will have to start thinking, is this because the market is trying to find an excuse to, how can I put this, to validate its own reality, right? A reality that'll become real as far as the price action is concerned. And this is what's kind of difficult to gauge about the market. We don't often know what drives it, but we can see where the winds are blowing because you can see like where the particles are going, right? And those news articles are pretty much just that, a tool to analyze if the wind is blowing in the direction that you think it is blowing to. So as things currently stand, Palantir is able to maintain its bullish trend in the medium, I would say short, medium, and pretty much the long run, with diminishing marginal increase and sometimes pullbacks because people are not sure if the stock deserves another, $5 in its share price. It has shown a lot of resilience in recent sessions, and the pace of its ascent, although slowed, indicates a potential shift in people's willingness to keep piling in money, but not really in their conviction that Palantir is a strong player. So, one factor that may influence Palantir's future performance is its status as a large cap. With the market cap increasing and in the leagues of like the large companies or large caps, Palantir can solidify its position amongst market leaders by simply keep rolling the snowball. Large cap status also increases like institutional interest and broadens its own investor base, both of which may contribute to further upside potentials. So, despite the current bullish outlook, it's essential to exercise caution because in the short run, while price targets are like in the range of $30 to $35, they may seem plausible, of course, but they are by no means a guarantee outlook. The market dynamics often changes pretty rapidly, and from one day to another, the market will always be able to find enough news articles here and there to justify that, things that were super bullish yesterday are now bearish. I've seen that happening with Palantir a couple of times, like from bearish to bullish or from bullish to bearish. So, with that being said, in terms of financial performances, this is definitely something that Palantir is good at. It's enough to keep the stock above a certain support level, in other words, baseline. But, since the stock has already been through a period of massive sell-off back in 2022, I would say that in the worst of the worst scenarios, Palantir might be trading below $10, like 8 to 9. But I personally also believe that if you factor in the fact that Palantir is now turning in a net profit, then it's possible that its actual bottom, given the current circumstances, is priced between $10 to $15. The key levels that I tend to look at are the cash, the gross margins, and the growth. The cash levels will tell us if the company satisfies its immediate demands, and that that could be a massive plus for those seeking stability and to prevent like endless dilutions. A lot of companies, they need external capitals to keep the lights on, but that's not the case for Palantir. So I would consider this as a pretty important factor to consider. Its gross margin has always been positive, which has always been a very important bullish catalyst for me. Like even when the stock was trading below $10, because its gross margin is positive, it just means that as soon as it has scale, as soon as you give it enough time to broaden its client list, it's only a matter of time before Palantir can start making money and to pay off its existing fixed costs. Like it's only a question of math. Given its highly symbolic and size-related significance, Palantir has its own opportunities like upsides and downsides. One of the primary reasons why people want to put their money in Palantir is for the potential to grow. It's often positioned and rightfully so considered by the market as a leader in this sector. It operates in the field with a lot of promises for the future economy. Businesses will increasingly rely on data-driven insights to make decisions. Companies like Palantir, they're well positioned and in this case well capitalized to meet their clients' needs. Its expertise in handling and analyzing large volumes of data helps Palantir to stand out to benefit the growing demand for data-centric solutions across a lot of industries. Also, its own financial stability is a reassuring factor for investors, because unlike many other tech startups, Palantir has a revenue-generating business model that turns in a profit, and this reduces the likelihood of further dilutions, providing investors with a sense of stability and a sentiment that they can trust Palantir with their money in the long run. It has also demonstrated its ability to capitalize on popular trends to generate a lot of interest, additional interest at that. And this is very significant for any sort of equity with a lot of retail traders, which is the case for Palantir. So this ability to capture the ongoing sentiment and to leverage it to its own advantage is also a plus in the eyes of people who are in for a quick buck, although I don't necessarily recommend doing this with Palantir at the current stage. So it also comes with its own downsides. One of those is the legal contingencies about its own business, data. Because we got to remember, data can be sensitive information, and the company might face a lot of regulatory scrutinies and legal challenges in just operating its day-to-day contracts, which could affect its operations and also to some point its reputation. Then again, Palantir never pretended that they're going to do no evil, so I think that the reputational part is going to be limited. But any negative developments in this area might significantly impact investors' sentiment and the company's financial performance. Another potential issue is the reliance on public sector. Government money is good, it's lucrative, they have deep pockets, and it's stable while it lasts. But the problem is, does it actually last, right? Because for those working in stuff like accounting, or sometimes even legal, there are requirements in some contracts that larger clients need to rotate around. They cannot have the same vendors over and over and over for the same kind of services, because that's when the rot might set in. So if these kinds of clauses exist in those contracts, then every couple of years, Palantir might face the possibility that they need to look for new clients, right? Which brings not only a layer of dependence, but also a layer of instability, funny enough. So every few years, you could risk losing 25 to 50% of your business without finding a decent replacement. This is a hypothesis of mine. It's probably not going to be that bad though. And then we can also consider the possibility of some sort of shift in the narratives. AI is very popular right now. It doesn't mean that AI is going to remain popular forever. So it could affect the investors' trust in the Palantir if one day, people have discovered the next new Eldorado to put your money into. If you look at what was popular 10 years ago, 20 years, 30 years ago, companies used to be very different, right? Some of them do change the world, but others, they just fade away. So it's a question of trust into a sector, and it's also a question of trusting Palantir to remain relevant. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all this, should you purchase Palantir shares right now? In my mind, the answer should be yes, but not because you should go all in at the moment. The price is relatively high in the grand scheme of things, despite the fact that we believe that Palantir will be able to grow in the years to come. But that's the thing. You should definitely let the volatility ride out of its own trajectory. And even if it lasts like a year, even if it lasts like 2 years, you should be able to get ready to face the music, right? So at the moment, we believe that the Fed is going to cut the rates in Q3 or Q4 of 2024. Is that necessarily going to happen? Is it gonna, necessarily going to occur? The probability is decently high, but it doesn't mean that it's always going to be like this, or it doesn't mean that it's necessarily going to happen like this. So you must position yourself in a way so that even if this trade doesn't play out the way it did, it's not going to hurt you. So my suggestion is, if you have any FOMO, start with a very small position and then to slowly accumulate it over the course of the next like 8 to 12 months, with a maximum exposure of 8 to 10% of your portfolio's capital, and then hold it for the next 24 to 36 months. That is my opinion on what you should do if you believe that Palantir is going to be relevant in the sector. And then also, I would say that Palantir is a stock that you should put your money in for the long run, and not necessarily to trade its short-term volatilities, because we're no longer in that kind of area. And also, it's just much safer and smarter to let things play out at their own time.